Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house.
And they know that they not like us. We ain't gon' do it. The only thing that can stop me is me. If you're doing this for the women you losing, do this shit for yourself. I do this shit for myself.
Style is the bomb, daddy bomb.
Real man of genius.
Today we salute you, Mr. Daily Profiler Statistician.
Mr. Daily Profiler Statman.
While others guess where the market might go, you crunch the numbers, projecting highs and lows with surgical precision.
The high of day, low of day, you've got them dialed in.
London Open, you've measured it New York over under. You've tested it Asia range. You've logged every tick since 2018.
No lagging indicators for this guy.
Only you can say, based on the last 47 days, there's a 63% chance the high of the day forms before 11 a.m.
Probability never sounded so
open a cold one, because trading isn't luck, it's statistics and a really big spreadsheet.
It's Mr. Daily Profiler Stockmans.
Good morning. Good morning, Austin. Are you talking?
There we go.
There we go.
Get the thing finagled there. Good morning, everybody. Yeah, I don't think that video will ever get old, Dark.
Never, not once. And if it does,
Well, we're about
to
find out. We're about to find out if NFP is happening. Forex Factory, there's nothing, but then other places are saying there. I don't know. I legit don't know. So we're just gonna let it play out here until we get into the analysis.
That's the cool part about what we do is like all of our data comes from NFP Friday happening or if it doesn't happen. It doesn't matter. It's like we've already factored it in. So our workflow system's the same. Period, right?
Winston, are you in the Discord? I remember you from Monday telling me to put Red Bull in my coffee, man. I need to check on you. We need to do like a welfare check or something. Oh man. Yeah, I'm just gonna give it until the news here because I really don't want to start breaking stuff down and then we get a insanity 8:30 wick and it just takes everything. So we're just gonna wait. Good morning, everybody. What up? What up? Pack Trades, Dale, Alex, Scotty, EP. Good morning. Good morning. Ziggy, Danny, Andrew, Father of Legends. Good morning, Chitaki. All right, 8:30.
All right. I mean, that doesn't look like an NFP Friday to me. Does it?
That's what I'm saying. This bid and ask usually starts getting a little jumpy.
That looks like a Canadian NFP Friday.
Yeah, what is this, dude? I want my money back.
Yeah. Let me fix that. Thank you for bringing that up. I gotta hook it up to AirPods.
Oh, you sound good to me. Danny said, listen here, bud. Winston, you're not. Well, you need to get in here now because you're cracking me up. That's funny, though. Second, good morning, Rat Pack. Hey, shout out to, while we're sitting here waiting for this news to do something, shout out to Candle Stalker locking in his 4th consecutive payout on the same account. Great freaking job, dude.
Absolutely. Is that better? Because I am hooked up to AirPods. If I still sound like I'm in a wind tunnel, like I don't know what to tell you.
No, you sound good now. You sound even better.
Okay. Perfect.
All right. Well, I think what I'll do is I'll just kind of, I guess, get into what I'm seeing, and then I'll pass it off to you because I guess we're not getting any news. I don't know. All right. Okay. Let's get this turned off. Okay. So before we get into anything, the first thing that I'm always looking for, hop into the 60-minute chart below all statistics. Now, one thing that I love to point out going into the middle to end of the week when we get into these Thursdays to Fridays is I want to see where we're at within the weekly candle, because just like a daily candle, okay, just like a daily a 1 minute candle, 5 minute candle, 15-minute candle, it doesn't matter. You'll watch it bounce, right? You'll watch it bounce. It'll make the wick up here, make the wick down here, and then at some point it'll close. Just like that phenomenon happens on the 5 minute, 15 minute, it also happens on the weekly. And what we're doing in the weekly is we're watching that weekly candle create the wick, create the body, create the upper and the lower wick. And statistically, that upper and lower wick creation of that weekly candle, otherwise known as the high and low, is typically made on a Monday or Tuesday, and then the opposite is going to be Thursday to Friday. And today, and this week is to be honest with you guys, perfect. I mean, picture perfect. We have a weekly high on a Monday, and then we have a weekly low right down here on locked in on a Friday. And so when we get close into the Thursdays and Fridays, these highs and lows of weeks, if we have, let's say, like a Wednesday low, or like in this case here, we're climbing below the weekly open, we're climbing below, we have a Monday high, and then we have, let's say, a Tuesday low as we pump up here. This low would now become important for me as we go into the intraday for market open. But because the fact we've locked in both the high and the low, that's not important for me. And so that's why I like to even use what the weekly profile is giving me. So that way, if we do have a higher time frame, higher low that could maybe qualify for an extended cash flow target or something, great. If not, move on. And so that's today where we've already locked in a good high and low of the week. It's not so much important for me. And on the flip side of that, because we've locked in the low of week, because we have a wick, think about how any candle forms, right? Most candles do not have no wicks, right? If you go even to the 1 minute time frame, almost every single candle here has wicks, right? And what does that mean? That means at some point, if it was a bearish candle, at some point as it was coming down here and forming that body, it got bought back up, even if it was by a little bit before it closed, leaving that wick there. The same thing that happens there is now what I'm seeing on the weekly candle is now that we've locked in a really good low, that do we keep on making a continuation to the downside and then we make a very, very small wick, which is the less likely scenario? Or is now the higher scenario, we've locked in the wick of the weekly candle, and then we can drop down to the intraday time frame, okay, the 5 minute, the 1 minute, to see what statistics are there above price to give us that little bit of a breadcrumb of that weekly candle pulling back up to lock in the wick. So then we go down to, after I get my footprint here, this is my bullish footprint, drop down to the 5 minute. We see that, okay, if, and then this is what we do as day traders, we think in if-then statements. If this is the in statistic weekly low, but we haven't made a new daily low, then what we could anticipate and look for a really good trade this morning is if we come down, take this New York 1 low, turn long, short for New York 1. We have all statistics above price. We could have an in statistic market open, good daily candle low of day. And then this would qualify for a really nice extended cash flow long to the upside, to all these statistics to the upside. Now, the other side of the coin, if we don't lock in this low, and if in fact we start correcting now and we start making a New York 1 long to the upside, well, now I'm going to be looking for the fact that if we do start retracing these statistics prior to market open, do we have any sort of, like, let's say market open somewhere here. This is where we get to use the daily profiler that I'll let Mick go even more in depth on, is if we lock in a long New York 1, if this is a weekly low, and then for the daily time frame, this is just going to lock in the low for the daily, what statistics are left above price for me to qualify for any other longs or cash flow shorts to the downside? So pretty simple today. Let me turn these off real quick. These aren't today's projections, by the way. Pretty simple today. If we lock in a really good in statistic low of day at market open, and then we break to the upside, this would qualify for extended cash flow longs. If we start reversing to the upside now before locking in that low, then I will be waiting to see if the daily profiler tells us that this could be a truce type of situation where we get the rest of these statistics and we start mean reverting, or is this we break below market open and then I can short for the false scenario and maybe a new low of day at market open. So that's my ideas today.
Cool. All right, if I can share screen, that'd be great.
Can't switch it. Where's your?
I shared screen. You just gotta turn it on. It's grayed out.
Oh
right
shoot,
now.
my bad, bro. I didn't see it.
Yeah,
there you go.
Okay, starting on the daily chart, right? We know that there's 3 types of pullbacks from a daily perspective that we look at. right? We're closing below previous month 50% on NFP Friday, so it's going to be very important to see how next week plays out. From a daily perspective, using Wednesdays and Thursdays candles, right? We can see that there's a 90% probability that the high of the day doesn't bridge previous day high. There's a 91% probability that we close below previous day open, right? And then there's a 56% probability, right, that we close below previous day settlement, right? All right. So with that being said, we can see that probabilities are more pushed to the downside than they are to the upside. We got that working with us. And then you already covered the weekly. No need to do that. So what did the pre-market give us? So we use the 6 to 9 range with different probability sequence to give us those. This is the 12-hour MAE, MFE, right? We can see that there's two problems to solve, right? Are we going to put the 12-hour wick in at 6 a.m. or between 9:30 and 10, right? And so right now we've got the pattern that says there's a possibility that the MAE is already in. And that if we do break to the downside for the daily profile, we got to look for the short false and get the 4-step reversal. And if we can't get that, then this is true. And that the MAE, this would be a shallow MAE to MFE. But if we can start getting that 4-step reversal or break into the upside, right, for the longs, then this is telling us long false around this median MAE bar right here at 9:30 to come lower. If we go short out of New York 1 and we can't turn it false, then it's telling us, hey, like you need to accept the true, right? All right, so now moving on to the daily profile, we know that overnight was a long pause broken and a short true, so trending conditions. Right to the downside, we have probabilities to the upside that we're paying attention to, specifically the P12 mid right now and the London OU high. Right, these are very important levels for us to pay attention to, and now I'm going to use data to show you why. Right, so we put short true broken, long. Wait a minute, that should be short true, right? Yeah, short true. Short true open. Let me reset this and do this all over again. Long, false, broken. Right, and then a short true. And we don't have any direction out of the 730 to 830 box yet. So, but we can still do our due diligence of finding out which one of these levels are the highest probability of netting, right, or accepting, right? So we know that these are the two high impact zones that we're going to be paying attention to what price does right there. Do we break out to the long side first and then turn around to make a new low of the day? Or, right, do we go higher to make a new low of the day? Or, because we don't have direction yet, do we break to the downside, get the 4-step reversal that we teach around 9:30, and then use these as high probability targets, right? So let's go see what the probabilities of these are as it lies right here, right now, right? Right, so we know that we're looking for London OU as it lies right here, right now, right? There's an 84% probability that we hit that London OU. The secondary mode is between 9:30 and 9:45. So it pretty much drops off at 10. So if we haven't hit that London OU by the, let's say 10 o'clock, then we know that the likelihood of us, that 84% the market is telling us, to go with the 15% over the 84. And then now we're going to come over to our levels. We can see that the P12 mid has a 91%, but that 91% usually, majority of the time, we're in the like 70, 80 percentile of that data now, right? Because 80% of the data, 70 to 80% of the times before this, it has already hit that P12 mid. So we know that that 91%, the last shot for that is at 9:30 and 9:45. And then you know that you're getting into the 90th percentile of, meaning 90% of the time it's already happened. So that 91%, the market's saying is going with the 9%, right? So you got to let it go. So with that being said, let's do some wargaming of the possible scenarios. Right, we're about to break to the downside right now, which will allow us to take 4 possible scenarios, 1, 2, 3, 4, and that will allow us to war game for 2 instead of 4, right? But because it's a Friday, like, it doesn't want to give it to me easy, but we're going to start with the short side of the house, right? We can see if we break out, and what this means, right? If we break out to the downside of the 730 to 830 box, first and foremost, right? There is a 69% chance. There is a 69% chance that we reclaim the top of that 730 to 830 high, right? And then we spend the next 3 hours in a trend-like environment, right? Going up and to the right, meaning that quarters can be respected. If this is the case, we expect the low of the day to come in at 930 to 945, right? Our current low of the day is 750, right? And so we know that if we break out first to the downside first, then it's more probability for us to go to the other side. There's a 30% probability, which we call the true, which looks like this, right? We break down, and by 11:30, we go short first out of the 730 to 830 box, and by 11:30, we were not able to reclaim the 730 to 830 high box, right? And that's happened 30% of the time, right? And then we can see that it's more likely that we continue to sell and then expect a 30-hour effect during the 11 o'clock, right? So that's those two scenarios playing out, right? We can see, right, that this is the probabilities for P12 low, P12 mid, and London OU. And you can see this is why it's important to see like the proper reversal. Right now, we're in a downtrending market from the weekly to the daily to the 12-hour to the H4 to all of the time frames. So we have to, even though this is the higher probability movement, if we do that if-then statement, we have to ensure that we don't get faked out, which is why we do the 4-step reversal. Because you counter trend trying to buy a bottom, and that doesn't lead well over time, right? So that's why it's important to wait for that 4-step reversal before really anchoring your longs mind into buying the dip mode, right? Now let's look at it from the other approach, because we have not broken to the downside. We actually did the opposite. We started going higher, right? Same scenario when it comes to true versus false, right? In this case, the first way we break out is to the upside, and that's where these P12 mid and this London OU comes into play, right? Because we're going to see as it breaks up to the upside first, is it going to find responsive rejection off of here to bring it back down for that false, right? So that's what we're going to be looking for if that's the case. All right.
Yeah, that
And so
P12
that
mid has, no matter if it's long or short, has a crazy good probability today.
Yes, it does. Absolutely. So it's either going to, this signature is going to either happen at the P12 mid or the London OU, right? Or what's going to happen, and I want to point this out right now, right here, right now, we can see that if that's the case, right, where we do this price action, that netted feature we just talked about, and we put the high of the day in between 9:30 and 10:15, then we can expect to put the low of the day, depending on how fast and violent, into day or early morning, and then we go into a range 1. Now that happens 62% of the time, the signature, if we break out to the upside first. This is the interesting part about if we cannot turn around, like let's say we do this action right here and we just by 11:30 never reclaim the low of the 730 to 830 box, then we call that a true. And then like failure to get a 4-step reversal would be the live price signature that we see, right? To make that determination, right? And then we can see if that's the case, there are probabilities for the low of the day to already be in, right? You can see majority of the cluster in the morning session, you do have like 7 to wherever the low of the day is right now. Let's go look, right? 1% of the downside. So, you know, that would be right here from a price standpoint. So if we make a new low of the day, well, we can't make a new low of the day for a long true right now, but you enter an anomaly zone. And then you do have data for that low of the day to be supported. So if you see the live price element support, like failure to make a 4-step reversal from the upside, you've got to believe it. And then this is a scenario where like you really want to target those extended targets to the upside, right? Because, and then from a 12-hour approach, that would make sense, right? Because like right now, like you made it past the 50% of the 12-hour wick MAE, right? And so you could head up to this target right here, and this was just an extreme wick before we started actually distributing in the right direction, right? All right, so what I see and what my trade ideas are, right? First and foremost, wait for the breakout, right? If we break out to the upside, like I will take cash flow longs to the upside as we come up, right? But I will be looking for that reversal with the 4-step
Hey, Mickey,
reversal.
real quick.
Mm-hmm.
We're getting a bullish distribution right here, and I will be taking a midnight trade if this candle closes with it.
Oh yeah, you need both.
We got 5 seconds left. So this is turning into an analysis stream and a trade stream. All right, I'm long right there.
Yep, I am as well.
0.12% targets. 0.12% is 159.25.
All right. So now moving on. So like I'll take cash flow targets to the upside all the way to P12 mid, depending on the time, right? If it's after 10:15 and we're touching the P12 mid, then I'm more than less inclined to accept the long true over the long false, meaning I expect more of this movement between here and 11:30 than this movement where we come up and then do a 9:30, 9:45 reversal and then start rejecting lower, right? So that's what I'm seeing today. If we go to the short side, I definitely will do the same thing. I will take shorts below the P12 low, right? And expect, you know, continuation, and same thing, looking for that 4-step reversal between 9:30 and 10, right? If I can't get it, then I start putting on extended trend models to the downside, right? All right, that's what I got. And I'll do high day, low day analysis once I actually have the side of the 7:30 to 8:30 candle that we break out first. All right, I am good if you're good.
Yeah, man. For anybody that was listening in, so this is a classic midnight snap trade. This is the only trade, okay? Because this is the only trade, the only trade that involves any sort of scaling into a position, okay? And so this, when we're at the low or near the low of the day, this is what's called strategic drawdown for the midnight snap. So I scale in low, right? And then if I get another position off this footprint, or if at market open, let's say, I don't know, market opens here and we get another bullish distribution, I can scale into this trade, collect the cash flow move to the overall targets to the upside. And again, midnight open, if I go to the 60-minute chart, you'll be able to see like 900 days. Past 900 days, 67.1% probability that between 8 to noon we retrace to midnight. And then go into the 1-minute chart, you can see midnight is right here. And so as long as I can get 0.12%, this is the cash flow move off the overall direction. And what this allows me to do is this allows me to be wrong, make money, and be done without even having to target the full move.
And that's a good point, right? And all the data was collected on this being the highest probable risk profile. When you have a measured move, right, which a lot of people can measure a move, right? They can say, hey, this is the sweep of previous 4 hours, and like I expect highs, right? I expect a reversal here. But what people don't realize is that move can be measured over time to give you the highest probable TP and the highest probable place to place your stop. But then also, right, that's a reversal style trade, right? And there's proper ways to position into a reversal style trade. And there's also right? What people don't realize is the specific risk profiles that you should be building through data, right? For each type of trade environment, each type of trade that you're taking, right? Does it make sense, right? If, let's say, weekly momentum, daily momentum, hourly momentum, 4-hour momentum, 3-hour momentum, 30-second momentum is all down and to the right, does it, and let's say, I usually use this analogy, right? Let's say you're required to be a long only trader, right? And the max contracts that you can put on is 10 micros, right? And you get to level of interest, right? Or POI or eyeball or magnet or whatever you put on your trading view chart to say, hey, this is a zone of interest, right? And so you hit that zone of interest, you get the entry criteria for that zone of interest. Does it make sense? Remember, all momentum's down. For you to put all 10 micros on at that time? No, it does not make sense, because more than likely, you're going to be wrong a couple of times on that entry and on that signature of the reversal, right? So it makes more sense to properly position size, right? And then in this case, like, we've got the data and we've done all the position risk profiling and where the proper risk profile should be for this type of market environment, et cetera, et cetera. So we took the measured move and we synced it with the proper risk profile, right? Through all data. This wasn't Austin just saying, you know what, I'm going to take this midnight snap, and I'm going to say, we're just going to use this as a DCA. No, like, it was specifically designed specifically for this measured move. The risk profile that he uses, like, is specifically for it, right? So you got to think that way, right? Just like, yeah, that's what I got about that.
Yeah, I posted this. We did this during the re-engineering this week for the boot camp, and if anybody is new, by the way, there's the QR code to the top left corner if you want to join this coming boot camp in January. But this is kind of my philosophy around how I trade everything, but we can even use this midnight open trade as an example. So anytime I'm trading, when I use statistics, these 4 things is what keeps me profitable. And so a lot of people, when they trade, their stop loss is the only thing that they use to determine their downside risk. And for me, I don't want to do that. I want to make sure I have as many safeguards as possible, so that way, I'm losing against the winning team. I don't want to take a loss if that loss could be avoided by some sort of objective probability. Or I don't want to take that trade if there is an objective probability that XYZ is not going to happen because I just feel it's going to happen. And so safeguard number 1 is that long-term probability, historic probability percentage here. We got midnight open. We know that midnight open has a historic probability of 6. I showed you guys in the current market, it's a little bit lower. In the historical, that past 900 days, 65 to 68%. Number 2 is cash flow portion of this move. Okay, well, if I know that midnight open has a historic probability of 65 to 68%, and then I just want to take a portion of this move to the overall intended direction. That's the MFE, MAE that we use. This 0.12% is a common MFE, and actually a high percentile MFE towards midnight open. Safeguard number 3 is I'm using positive risk management. Not only am I using the positive EV, so the higher positive expectancy move of this, but I'm also not just letting this go to the depths of the earth against me, right? I'm letting myself go into drawdown, give myself an allowance, a budget for this trade. And then if market opens, let's say market opens and we do get that New York 1 short, great, darn. We close below market open, limit my risk. As soon as we close below market open, that's my invalidation, or if I hit my budget of the day, my budget of this trade. If I get a reversion, okay, and so let's say I get a bullish entry rate right here like I got, we come down, and let's say we come back up, and then I get another entry right here. Well, now, what have I done? I've scaled into a position because I've kept it light. Position 1 is here. Position 2 is here. This brings my cost basis down right here. And now my target is worth double with less price movement towards objective statistics, objective areas. These levels have, like, look, even like right here. This level has an 85.71 in the past 15 days. If I go to the 5-minute time frame, you'll see a little bit more. In the past 75 days, this level has a 91.89%. 87, 86, 87, 90, 90, midnight open, P12 mid, opening prices, all these opening price, right? So we have a lot of levels that says if we can't even get 0.12%, which is 30 points, if I can't even get 30 points, I'm going to let my risk do the worrying. I'm going to let my stop loss do the worrying. And I'm just going to scale into the trade because that's what the rules are. And that's what keeps this a positive expectancy. So one thing that I love that trading with statistics does is exactly what we just demonstrated, that it gives you peace on the charts, right? You don't have to sit here over perfect trying to get in at the perfect price, because we all can agree that trading is all about risk management. Well, then this is how we manage risk. This is how we manage risk around objectivity. If I have an objective entry criteria that if I were to ask 10 out of 10 people, this is where bullish intent is presenting. And then if I also know, okay, well, this is out of a historical data set of XYZ, this is going to give me a 65 to 68% accuracy. And then if I know I'm in the low of the weekly candle, if I know I'm in the low of the daily candle, and I'm okay with some drawdown, I can scale into this position and build a really nice position for literally just 0.12%. And like I said, the invalidation of this trade would be if we can't even get 0.12%, either my budget for this trade, I can't get any more, we just keep on going to the downside, or if at market open, we break below market open, boom, I'm out of the trade, because now live price is accepting below. And if we get back to the upside above market open, I can get right back in for extended cash flow longs for all these levels. So this brings us to the final segment of Friday War Games, which is bottom line up front. All right. So like I said, my trades up front is, and also the other cool thing is these midnight open trades, I take them on a separate account. So that way I still have, like you guys can see down here, I'm logged into my NinjaTrader prop account. So I can trade the market open just like normal, nothing crazy. And I can let my midnight trade do what my midnight trade does on my top step accounts. And so for my market open trade, I'm going to be looking for, if we do come back to the downside and turn New York 1 long, I'll be looking for extended cash flow longs if market open is a new low of day for the rest of the statistics to the upside. If we break to the upside, turning New York 1 long, and we start retracing prior to market open, I'll be looking for longs above market open to P12 mid. So however I can structure my target, that's how I will do it. If we get above New York 1 and turn New York 1 long and we open up the market here and break to the downside, I will be looking for extended cash flow shorts for a new in statistic low of day. And that's what I see. Mickey. Oh, you're muted, bro. I see your mouse wiggling.
My bad. So right here for me, it will be, I exit out of this midnight for trade if we breach to the short side, because I want to see that new low of the day form and then give myself the chance for this 4-step reversal to happen to actually re-engage with this midnight trade. And then like 9:30, if it sells off, I'll take the sell for 10 basis points, pause my trading, and then like wait for the 4-step reversal if that's the way we decide to go, right? If we decide to step up in the long, I'll take cash flow targets. And I want to see how we engage around P12 mid and London OU, right? Let's say we step above 10 o'clock 05 is boxes right here. I'll go in and take another long for cash flow targets because I have this London OU probability. So basically, like below this 730, 830 low, I'll take cash flow to the downside, wait for the 4-step reversal. Above, I'll take cash flow to the upside and wait to see if it wants to just come to the previous day mid and reject it, like it's done a couple times this week. But yeah, like, We've got plenty of distro. We did spend overnight a lot, every single session overspent. So I am expecting New York 1 to overspend as well. Right, and for us to breach the 10-day median range. Yeah, that's what I got.
10-day median to the upside or downside?
Right now, right, that's going to be a determination of if right now it's looking like it wants to be to the downside, right? But we know we don't
Yeah.
just move straight, right? We know that there is a high probability that this high of the day is in, right? Which is why
Yeah.
you don't see that I'm trying to target more of upside past this P12. I do expect that eventually we'll come up to mid, and if we get to the London OU, then I'll be definitely sus of this high of the day. But it's more likely to get a new low of the day and then reverse and come to this than to get a new come up here and then come back down. So yeah, I'm waiting for the 7:30 to 8:30 box to break to kind of give me more clarity. Or the market open, whichever one comes first.
All right, it's too easy, man.
Yes,
there was
sir.
one comment in the chat I wanted to bring up here. Winston, we were joking around earlier. He said, I was back in the day when you opened the doors, the first and second group got cold feet, and then he's back here after 200 plus burned accounts. This is something that like I kind of it hits a little bit close to home because I think all of us as day traders, right? We all go through that boom and bust cycle at least 100 times, and I want you guys to understand something. You are the only person that's going to be in your own way between that 200 plus burned accounts being you're done, or you're going to finally treat this like a business and change. Because the thing I can tell you, Winston, and anybody else here that's watching this that relates to this, if you are building any other business in the entire world and you can't pitch that business to anybody and they give you money, aka like if you watch like Shark Tank, right? Shark Tank, they're like, let me see your business plan. If you can't even break down your trading plan, just like how they would a business plan, and you don't know your trading plan like the back of your hand, why are you still trading? We think that clicking a button, because we've been socially accustomed to that action, equates to progress, right? Because in most things it is. If you work hard, you're going to do progress here. If you work with your hands, or if you're doing this or you're doing that, you're making progress. But in trading, it is completely different. And if you are operating a business that is hemorrhaging you money, if you like, please go into this weekend and really think about this. If you are still operating a business that is losing you money, stop fucking trading. Stop it. And if you can't stop it, there's where you start. AKA you probably having a problem or an addiction by clicking the button. And people need to hear this, because this is exactly the curse that a lot of these people make, where they understand that they're struggling. They understand that they're trading unprofitably, yet you're still clicking the button every day. If you were to go and have to put up all this money and stuff to set up an LLC and set up a physical brick and mortar business, would you not do that until you have a full-fledged bulletproof plan that you know that if worst case scenario, you're going to fall back to this plan? Would you not do that? Or would you go and just the first thought that enters your brain, I'm going to go sell these t-shirts, or I'm going to go sell these shoes, or I'm going to go do this or do that. Then next day you have a full foot. No, you would go methodically. You would make sure your numbers make sense. You would make sure that where you're going to open the store, you have all this stuff, right? So why do we not do the same thing as traders? Why do we not look at this like a business? Why do we not say, let me put down the button clicking, open up my ears, and stop bleeding myself? So I want you guys to go into this session and into this weekend really thinking about that. If you relate to this, if you're that person, 200 plus burned accounts later, do you want to do another 200? Do you want to keep on doing the same actions that led to that 200 and thinking in the back of your mind that if I just change, or if it's just this one time, it's good? No, it's not going to be different. You're going to get lucky. You're still going to get trades that win, but long-term you are trading at a negative expectancy, and you will blow up again. So I hope this helps you. And I hope anybody out there, like, I hope this, like, hopefully it opens your eyes. If you don't know your MFE, if you don't know your MAE, if you don't know the best days of the week, worst days of the week, if you don't know what statistically your target that you're shooting for has a historic accuracy of, stop trading. Stop. If you don't know the drawdown, the typical median drawdown, the average drawdown, if you don't know your max loss of in 2025, what was the worst day you've ever had based on your edge, stop. There's so much stuff that you can do to make yourself better for your future, and your future self is begging you to do that. Your future self is begging you to say, hey, Winston, stop it. Stop it. All right. I'll end with that. Because I hate when I see you guys going through stuff, man. I hate it because we all go through it. We all relate it. But it's like when you see somebody standing in front of a bus and they're like, maybe this time the bus will miss. Like, we don't want to, we want you to, we want to push you off the street, man. We want you to get better. All right. All that being said, if you guys are in the pack trade group or the boot camp, on Fridays we do community live trade sessions. So hop in over into the Discord, and it looks like we already got a decent chunk of people over there. We got Carl holding it down. In the community live trade sessions, what we like to do is, this is a cool benefit that we let the whole community have, where we merge the pack traders that are already accustomed to what we do and have already been trained up, and now they're just live trading every day. And then we have the boot camp members that are just learning this stuff and they're just new. And anybody and everybody, Mickey and I try to shut up as much as possible. And we just let the members articulate price, call price. If you're a pack member, execute price with the tools, and kind of, because the cool thing is it's obviously Mick and I, we're the ones telling you guys every single day, but it helps you to learn from another perspective. And it also helps you when you hear from another perspective how it could benefit you. And maybe it just took hearing Carl say it, or Dr. J, or Drez, or Julie, or whoever say it one more time just a little bit differently, and boom, it clicks. So that's why I really love the Friday session. So hope you guys have a wonderful rest of your day. Hope this analysis and stuff that we went over today was helpful. Stay grinding on your freaking goals, and never let anyone tell you that you can't do something they've never done themselves. And I'll see you guys later. Bye, everybody.
Later, Raiders.